Good morning, I'm Chris Beach and welcome to Charter Markets on IG Live. And of course, we've just had the Bank of Japan decision overnight, which the last major event really of the year for global markets. The Bank of Japan, unsurprisingly, kept rates unchanged and indeed quite dovish in its outlook. Bank of Japan Governor Ueda in the later press conference said that they would be waiting until wage data in the first quarter of 2024 to actually make a decision on any changes to policy. So that gave the Nikkei a big lift. It pushed the yen down against the dollar, which has been a big theme. A rising yen has been a big theme of the past 2 or 3 weeks. And really confirms, of course, that central banks, I think, remain more tilted towards keeping policy looser now than they have been. Certainly, the Bank of Japan was the one that had been expected to start tightening policy next year, just as everyone else was beginning to loosen. Now, they probably will tighten policy next year, but it certainly isn't going to happen anytime soon if indications from this morning's meeting are anything to go by. Otherwise, mixed morning for European markets, erring mostly on the positive side. However, we're expecting a positive open on US markets yesterday. The big other news of the past 24 hours has been, of course, the news that several shipping companies will be redirecting their vessels around and to avoid the Red Sea. And that's obviously caused concerns that we'll see a spike in oil prices, that we could even see inflation start to rise again as supply chain concerns come back to the fore. But with the announcement of a US-led task force to try and deal with that, that has calmed some of those fears. And as we'll come to at the end, oil prices have come off the highs of yesterday's session. So as I say, not a spectacular morning for European markets, but US markets continue to hold at their highs and no sign of any pullback there. And indeed, of course, we're now fairly completely into the time when a Santa rally, we can use that as it's now mid-December, should start. Usually it starts from the Monday, the 12th, the 18th trading day of the month rather, which was yesterday. So we'll see whether that puts further pressure onto the upside on global indices. Started with the indices, beginning with the Dow, currently trading at 37,337. All the threes and all the sevens this morning, just off by a whisker the highs that we saw on Friday and indeed Monday's session. The index closed above 37,000 for the first time in its history on Wednesday, with no sign of it slowing down. That caps an astonishing 16% rally for the index from the October low. So I think it's even outpaced the Nasdaq, or certainly it was almost beaten the Nasdaq in terms of returns since then. And the question, I think, rightly now is where it goes from here, because really what we're looking at, if we can sort of take all our biases, and with indices we get a lot of biases, I think here's a breakout from previous highs. What you could normally see is a retest of those previous highs, so it could drop back towards 36,954, 955 is the high from January of 2022. That would knock all of about 300 points off the index and take us back to roughly where we were on Wednesday afternoon of last week. It wouldn't be surprising in Q1, I think that's the best timeline we can give it at this point, to see a pullback of some description. Even if it dropped back towards 36,000, that would take just less than 4% off it from current levels and wouldn't even be a significant correction. But it would perhaps reset some of the, we can say, overbought readings. If you're looking at percentage of stocks overbought on these US indices, they're at their highest level in at least 2 years, if not earlier. So very, very strong performance. But what history teaches us with the stock market is that strength tends to beget strength. So I don't think we should be expecting a total reversal of these gains, barring some unforeseen development. I think what we should see maybe is it drifting into January higher, and then at some point between January and the end of March, I think you will get that pullback. But it's almost impossible to say when that arrives or what the reason for it will be. But it will happen, and it will probably be a good thing for the market because it will clear out a lot of the froth, and then will undoubtedly allow, I think, a continued move higher for the index. So at the moment, we're just holding on and with a couple of support levels, potential support levels at the previous high at 36,954 or down towards 36,570. For the Nasdaq as well, another very, very solid performer over the past few weeks. Not quite at a record high. In fact, yes, the Nasdaq did beat the Dow with a 19% return, unsurprisingly. But as I say, just below the record high from the end of 2021. But it has now recouped all the losses made since the beginning of 2022. An astonishing round trip, and remarkably quickly as well. The old adage has it that markets take 3 times to rise as they do to fall. But this time we've seen the index drop within the space of a year and then recoup all that lost ground within the next calendar year. So it's a very, very impressive performance, and comes off the heels of this huge breakout from a descending channel that we saw in July, August and September. We did have a bit of a pullback in the Nasdaq into the beginning of December, and that was the springboard for another gain. Again, you can argue it does look overstretched at these levels, but momentum tends to carry on for longer than anyone anticipates. So I would not be surprised to see it eke out a record high, even by the end of the year, and indeed test 17,000 in January for the time being. And any pullback that drops back towards maybe 16,000 remains more of a higher low, and that's potentially a buying opportunity. But it's the Nikkei where we're seeing actually some interesting action. We're not just stuck at or above recent highs. The index had struggled in the second half of November. It had reached its highest level in mid-November since the beginning of July, and it seemed to be rallying along with global markets, but it's been left behind since then by the US because of that strengthening yen. The Bank of Japan was making noises that it would start to think about or talk about tightening policy, if not actually doing so. That strengthened the yen, weighed on the Nikkei, which is full of Japanese exporting companies, which get a lot of their income from overseas, so a strong yen hits that income. Excuse me, but today's Bank of Japan decision left policy unchanged and was fairly cautious on what they might do next. So unsurprisingly, the yen weakened, dollar strengthened, and you had the Nikkei rallying. And again, we've, in the space of one session, we've recouped a lot of the losses since the end of November. So the next target really now becomes essentially this area around the highs from June and indeed November, around the 33,950 to 34,000 level. That's the barrier to further upside. And whilst the Dow's at record high, the Nikkei will then move on to its highest level. We have to zoom out all the way for this. Its highest level here since 1990, so 34-year high for the Nikkei. Steadily recouping all these losses since 2012, and a very impressive run it has been so far. A very strong uptrend, but just finally getting back to where it was some 34 years ago. So where it goes from there, the next big level to watch becomes that record high all the way up at 38,950. So that's a long way to go, really. That's asking quite a lot of the index, but that's probably our medium-term, long-term goal, has to be said. But overall, what you saw with the Dow and the Nasdaq is when they break out from highs, they keep going. So if you see that in the Nikkei, if we close above 34,000, it's quite likely that we keep going as well. And we're also being treated to a impending bullish crossover on the MACD, which we've not seen since the beginning of November. So that should once again hand a bit more strength to the bulls as well. And in FX markets, not too much to report this morning. The Bank of Japan was the main mover, but we'll start with euro dollar, which after being knocked back sharply on Friday, has clawed its way higher the past couple of days. We're back above 109. It looks like we do have a further appetite to push this one back towards 110 and indeed higher over the medium term. A very strong recovery for euro dollar since the beginning of October. It started to rally before global markets because of the weakening US dollar, and that's given it the air cover it needed. Higher highs here made at the end of November, and indeed we're back there again where we were last week, and crucially there's your higher low. So this uptrend has had a bit of a shakeout and it's recovered, and that now gives it room to move further to the upside, potentially taking us on over the course of time to 112.75, with trendline support coming in quite a way below where we are at the moment, but you need a full-blown reversal back below 107.40 to really put a suggestion that a more bearish view does prevail in here once again. Turning to euro sterling, another one to watch, of course, because here's the euro gaining against the yen as well, unsurprisingly, given the dovish statement from the Bank of Japan. The ECB, for reasons that do look a bit odd at this point, is still committed to fighting inflation, despite the weakness in the Eurozone economy. So that has strengthened the euro in the short term, at least. And here again, great example of a long uptrend that's gone through steady consolidations for September and October, rallied to a new high, and then comes the pullback. And that's taken us back below the 50, 100-day moving averages, finding support though as it nears the 200s. So it's interesting to see as it get to this area on 155, the buyers started to emerge along with the rising 200-day. We rallied off that, and that puts us back on the high low created, and that certainly puts us back on course for a test of those highs at 162, 163, and indeed 164 from November. So a solid performance there for euro yen as well. And with the macro backdrop now fairly clear for the time being, there's not an ECB meeting for several weeks nor for the Bank of Japan, so there is space now for it to make further headway to the upside. And then the last one of those, again, just looking at the yen to keep an eye on this, of course, the one that everyone watches, dollar yen, very, very strong performer over the past, really since the beginning of the year. Essentially, dollar yen found its footing at the beginning of the year along with equity markets and rallied sharply. It's taken a decent knock, and given the scale of the gains made, it's not surprising. We wiped out, in this pullback from November to mid-December, we wiped out all the gains made since the beginning of August, which is always perhaps a lesson in some ways, not to expect some kind of volatility along the way. But nonetheless, it's still an uptrend. And if you want a sign that the uptrend is looking strong, you can't ask for more really than a bounce off the 200-day moving average. Slightly similar to what we had in mid-July, but overall, buyers could well be in charge here. There is one caveat, given the scale of the declines, we've got a bit of trend line resistance that still needs to be broken. So there's a bit of work to be done here. Close above 145.80, 146 would set the seal on that, really. You might start to see some further buying pressure. Maybe it tests trend line resistance and has a bit of a struggle breaking higher. But at the moment, I think it might be hard to argue that this one is poised for further upside. And then turning to commodity prices, gold, again, helped by that slightly weaker dollar this morning, doing its best to try and recoup some lost ground. We were down on Friday. We clawed our way back higher again Monday. Looks to be continuing in early trading this morning as well. Back above 2020, having moved back above 2000 last week. Really, again, there's your high low. This astonishing volatility that came in gold prices from the December high, the record high for gold, back down again to 1980 in the space of a week or so. But stabilized, consolidated, the buyers have reassessed where they are, and they're prepared to push this one higher once again. So price action remains supportive, I think, at the bullish view, with a rising 50-day moving average as well. Could see us move over the course of time back towards 2060 and 2017, that high just before, from the very beginning of December, just before that spike to the upside. The bearish view fairly cancelled out now with this recovery back from where it was last week at the lows at 1977. And oil prices, a lot of interest here, of course, because yesterday you had the news that a lot of, well, BP and others, as it turned out, would be diverting their vessels from the Red Sea to avoid any drone or missile attacks. So that sparked fears that you'd have an oil supply crisis to an extent, that you'd have an inflation crisis, and so oil prices did surge during the course of Monday's session. They ended the day fairly indecisively, roughly where they started it, because of the news that the US would be implementing a task force to try and protect vessels as they sail through there. But it was the kind of thing, again, that was not surprising. You'd seen oil prices drop sharply in the first half of December, took them down to their lowest level since the beginning of July. So some kind of rebound was to be expected, but as you can see, it remains at a very low level. And until it gets back above 77.50, I think you've got a real struggle here to muster a bullish view. So for the time being, maybe it does keep moving high a little bit if you get more news from the Red Sea. Certainly a close back below 71 suggests that we're off back to the 68 lows we saw last week, and maybe even down all the way back incredibly to these 67th lows from June and July. But so far, sellers broadly in control in oil prices, just a bit of a rebound since the lows of last week. So to the rest of the day, and it's essentially a quiet session, not much on the calendar really now until the end of the year, just some housing data and also US PCE prices on Friday, just to round off the year really. But that's about it for global markets in terms of major events. So famous last words, there are no expectations of a significant uptick in volatility. I'm expecting a positive open for the Dow, starting about 30 points higher from yesterday's flat close. That's it for me. Thank you for joining us, and we will see you again tomorrow at 10:30.